All right, welcome back, founders. Our last segment, part 3, last but not least. We've saved the best for last, maybe, although I'm a huge fan of profiting, so I'm not sure if this is the best segment, but just as important. We're talking about industry benchmarks, and we are joined by Robichaud, Nail the Number Pro, and founder of Demystify Your Profits. Ron, we've been working together for years now, and every time I speak with you, I'm always, mind blown with the expertise that you have. So glad that you're here today. Again, thank you for sharing your time. And this segment is all about industry benchmarks. And I'm somewhat hesitant to have this conversation because I'm not a big fan of comparison. We should always just kind of focus on what we do and be the best version of ourselves and do the best we can with the business that we're running. But I know many people are always curious. Many founders and many organizations that support founders are always curious to see where founders land with respect to industry benchmarks. So maybe you can share with us a little bit about your understanding of industry benchmarks, what you've witnessed and observed over the time you've been working with business owners over decades, really, and just your stand on industry benchmarks.
Well, and again, if you look at, you have Industry Canada that has a website that you can go on and you can click. There are about 10,000 NAICS code. Those are the North American Industry Classification Codes. So whenever a business is filing their income tax return to CRA, they have to put in an NAICS code. And so whether they do it or their accountant does it, but most entrepreneurs don't even know what the code is because the accountant does that automatically for them. So regardless of that, is that what all your financial information that goes to CRA, it's being extrapolated into these classifications, these sectors. And so again, like I said, there's about 10,000 that exist. And so what they've done, and then they take the financial information from their balance sheet and an income statement, and they put them in groups, okay? They put in groups of sectors, and they also put them in groups of revenue categories. So you've got sort of like 4 quadrants. You got the bottom 25, the next 25%, the next 25%, and the top 25. So this is the Industry Canada website that's available. If you just Google Industry Canada financial benchmarking, you'll get that. And then you can go down the category, and it's going to be like a 6-digit number. And then but you can find your class, more or less. So then you can see what whoever's been reporting financial statements to that, and they take all of that. So they provide averages for everybody who is in that revenue category, whether it's between, let's say, 30,000 and 35,000, and 35,000 to 90,000, and then 90,000 to, let's say, 125,000, and then 125 to 5 million, because it's always sort of that. You can get some industry information more than 5 million in sales, but that would be another sort of benchmark.
I think, you correct me if I'm wrong, they also take into consideration number of employees and geography, right? And they're taking the annual returns and then of these companies in these regions, and then you can segment that way as well.
Well, you can segment them by province, and you can segment them also by either they're incorporated or they're not incorporated.
Oh, okay, both. Okay, great.
So you can segment them that way. And with experience, if you know what the level of revenue is and you know what sector they're in, you can tell exactly how many employees they have. I mean, it's sort of like a reverse engineering type.
Okay. Okay.
So, because we know that, typically, because if you look at the benchmarks, it'll tell you what the percentage of revenue, of revenue would be spent on labor.
Right.
And then, so if you know what the labor cost is for that sector, you can pretty well tell what the number of employees they have in that business. Having said that, though, is that so this industry indicator, so this information is because of every business in Canada submits their financial statements on a yearly basis, or supposed to, those that are on time. So then, but we do know that in the last 30 years, and if you look at Statistics Canada, or again, Industry Canada Small Business Profile, it will tell you what's the amount of businesses, the survival rate of businesses. So we still know that 50% of all businesses end up closing their doors within the first 5 years. So we do know that those first 50% are not making any money. That's why they close their door. Lack of profitability is the main reason why people close their doors. So then we have 80% of those businesses that have surpassed 5 years are making less than 1% net profit. So this is the problem with industry indicators. If we look at that website, you've got the worst performers because it's an average of all the businesses. The 50% that are losing money, the 80% that are just making 1% net profit, and the best in sector. So they're all in there. So when you're looking at benchmarking if you're going to compare yourself to that group, just realize that probably 85% of all businesses are in a really bad situation. So if I'm going to say, well, I'm going to be like them,
Yes.
then you're part of the problem. So
Yeah.
again, knowing what the industry averages are or industry indicators are, they're good in the sense, for at least looking at it. The one thing I will tell people though is if you're looking at that data on that website, I just look at which one has the highest net profit and how are they operating with that highest net profit. It doesn't matter how big their sales are.
Yeah.
So then, and I would tell people, try to keep your costs down, all your expenses down to those that are the lowest in those. Doesn't matter if they're first 25, second or third or fourth 25 percentile. Just look at the ones that have the lowest costs as a percentage of revenue, and always look at the percentages. Don't look at the dollar figures because that's a criteria that you can give.
Yes.
You can either look at the numbers or look at the percentages. I always look at the percentages. Again, the percentages give you a lot more information. So then look at what their costs are. Try to be equal or better than what they are, the best in sector performers, or the better ones, in order for you to get that 10% margin.
Okay. So I'm hearing go on to Industry Canada as an option if you're bent on needing to know what the industry is doing. Get your NAICS code in there, take a look at it, but understand you're looking for the company or the companies that have the highest net profit. Go there first. And then taking a look at what companies have done very well operationally to keep those costs down. I have to say though, right away, my mind worries a little bit about those companies that have low operating expenditures. Are they actually really accounting for all the true expenses, and or are they accounting for that owner's salary? What are your thoughts on that?
So this is why I don't like industry standards. So then I go back to, what do you want to end up with as a business? I want to end up with a minimum of 10% net profits after I've taken myself a fair market wage. What are my operating expenses? So it's a bottom-up approach. I want 10% net profit. My indirect expenses plus my wage is going to be a certain percentage of revenue. So let's assume, hypothetically, let's assume that that's 35%.
Yeah.
So my net profits plus my operating expenses of 35%, that means I need a gross profit of 45% in order to pay my operating expenses and leave me with a 10%. So if my gross profit is 45%, my cost of goods sold cannot be more than 55% because my gross profit plus my cost of goods sold is equal to 100% my revenues. So then whenever I price my product or service, it cannot be more than 55% of my revenue every time. So now you know how to price your product or service.
I love it. Okay. So I think that's a really important message. And it reminds me a little bit about how we started off this segment, where when we're looking to measure our health, right, to understand our vitals, our stats, right, what's important to us. And that when we take a blanket approach to it and we think, oh, body fat should be, whatever it is, I'm going to say 7%. And that's probably way wrong. I think it's closer to 14 or 17. But these labels that get put on things, they can cause a lot of damage, especially for founders in the process of building their business. So know what you want from a net profit perspective, understand the operating expenses. And if I can, I'm just going to throw in here, because this has been my experience. I don't know if this is your experience, Ron, that the many founders are they're bootstrapping and they're trying to do everything themselves. And in most cases, I see operating expenses go up because they haven't really truly budgeted for the real expenses, which also eats in to their net profit because it has to come due at some point. So I love what you're saying about just really understand what's important to you, starting from the bottom, working your way up, which is going to then influence your cost of goods, and then get you to understand what your true revenue needs to be, so that you can start making those efforts to bring in that revenue and kind of getting outside of yourself to get those sales calls in.
That point about bootstrapping is really important because what I tend to tell entrepreneurs is, make a list of the things that you do. Okay, so are there things that, again, if I could hire somebody and pay them, let's say $20 an hour, and they can do these 5 things off my list,
Yes.
which will allow me 20 more hours a week to focus on the things that generate revenue and get me the profits that I need, because I can't get that person to do that. But a lot of the mundane things that I'm doing is just taken away from the time that I should be focusing on growing the business or making sure
Yes.
I'm getting the profits. So that's another way to look at it, because if you try to do everything yourself, sometimes you're just going to get, lost between the forests.
Yeah, and burnt out, right? Especially now through COVID, as mentally we're already, dealing with a lot of stress. And it feels to me, I don't know if you've been seeing this, it's like everybody's just getting tired, right? It's like, oh, I don't know how much longer I can go. So it's not just running the business. You've got all this mental exhaustion and fatigue that is now compounding the issue with the business. So get the help that you need with staff and people to start taking on these
And it
things.
comes down, and I'll sort of leave you with this in a sense that, in order to get wherever you are in net profits, and you want to go up a few percentage points, because every percentage points that you go up is going to be a benefit to your business. There's only 4 things you can do, but I always say, take care of the pennies, the dolls will take care of themselves. 1 or 2% price increase. Cost of living goes up every year, you might as well do that. Keep an eye on your operating expenses, your direct costs, your labor and materials, so that it's as a percentage of revenue, you're maintaining that. You can't manage it if you can't measure it if you can't manage it. So I'm sorry, you can't manage it if you can't measure it. So the thing is to keep your financial information up to date.
Yes.
Don't wait till the end of the year, bring it to your accountant, then you have you're 15, 16 months behind. So maintain that. The other one is, again, from a budget perspective, your operating expenses as a percentage of revenue. Just make sure you're not blowing your budget. Maintain it as a percentage of revenue. And then, again, and then just do small things, small things.
Yeah, small things, right? The small steps are the ones that add up. You don't need to jump the chasm in one big jump. And then, just as we were talking about in the space between segment 2 and 3, we were talking a little bit about merchant fees, and that 2 to 3%. And as you mentioned, if you're using Etsy or some online e-commerce platform, they have fees attached with every transaction. You had talked about how oftentimes we see that in operating expenses, where that truly is a cost of goods.
Exactly.
And that can be, an extra 2 to 3% on your net profit, in addition to increasing your price point. So thank you, Ron. I want to just mention, we haven't talked about the tool that you have so generously provided the founders in this episode. It's your own kind of personal benchmarking tool out of all the decades of experience that you've had, and where you see business owners landing. And you've put it together so brilliantly, and you're willing to share that with us. Is there anything you want to say about that specifically? I know we've got opportunity to calculate the ratios. I know it's hard to talk to when we don't have it up on the screen, but I just wanted to give you the opportunity to weigh in on it.
Well, simply, it's like I said, it's a simplified tool. It talks about, those, what are the major ratios that we should be keeping an eye on a monthly basis. We can calculate those. You just have to plug in the numbers on your either financial statement or your balance sheet, and it will calculate everything for you. So what is your current ratio? What is your quick ratio? Those type of things. But on the second page, on that spreadsheet, is I've also provided, sort of the typical, again, the 80-20 rule. 80% of the businesses are within, or are in that segment. So what I've provided you is those same ratios that we're calculating on the first page. Now you can do a comparison to the worst and the average and the best in sector performer. And I've given you, I'm not sure how many there are. There's probably 50 or 60 of them. And so you can sort of look. You can take that first page, what are your results? Then you can plug in the information from the second page, and for your sector, what is the worst, the average, and the best? So where are you? Are you worst, or are you average, or are you best? So wherever you are, what are you going to do to improve? And there's a little bit of a line there, say, what actions can I take in order to get a better result here? So it's just a simple tool, but I think it will be helpful.
Thank you. It will be helpful. I know it will be helpful. And it's just, as you mentioned, small little baby steps, right? You don't need to fix everything overnight. You just start taking a coordinated and cohesive approach to fixing everything, and you arrive there. Well, Ron, thank you so much for, again, investing the time in Founders and all the work that you do. I know I want to be respectful of your time. You are moving into retirement in the next little while. You've been so generous over the decades helping founders to make sure that they're profiting in business, and I'm excited to say that we'll be getting the opportunity to partner up together so we can take this financial intelligence that's in your brain and being able to put that together in the Nail the Numbers Academy, so people can take a coordinated and cohesive approach to one step at a time. How do we start to actually pull these pieces together so that we can create that profitability in business? And as you mentioned, then all the ratios fix themselves. So I'm really excited to be working with you, Ron, on that initiative. Very excited to get that up and running. That should be Q2 of 2021, where we can see some of the first courses start to trickle in for founders out there. So thank you, Ron, for all that you do, as always, and a huge shout out of appreciation to our champs, Community Future Saskatchewan, for all that they do. Community Future offices really across the country, some of the first responders out there for founders in rural parts of Canada that, you know, through COVID, it's like, oh, what do we do? And if I can just say, you know, I know there's a hashtag out there like rebuilding better and stronger than before, right? COVID did not cause the financial fragility and vulnerability. It simply exposed it. So let's not go back to business as normal. Let's go back to business better, right? Let's do it. Ron, thank you. As always. All right. Thank you, everybody, for watching. We will see you in here for another episode of the Gab Lab. Until then, stay safe, stay strong, and stay financially fierce. Bye for now, everyone.